Hi, good afternoon. Welcome to the Marketplace. Coming up, government to roll out a major policy initiative aimed at helping the country benefit more from the surge in gold prices. Also coming up, Bank of Ghana signals deeper policy review of domestic gold purchase program as it takes steps to improve its reserves for the year.
Members will need to consider how its timing, its sustainability, and the balance sheet implications. All these should inform the calibration of policy and the ongoing policies to build reserves.
Plus, Securities and Exchange Commission reaffirms commitment to protecting investor interests ahead of the issuance of a corporate green and sustainability bond.
Show you that any corporate body that will want to issue the bond, we would do our work to ensure that the investor's interest is protected, so that when that bond is issued, the bond will trade well on the Ghana Stock Exchange, the value of the bond will grow, the price will go up.
My name is Darryl Kwao. Details coming up. Thanks for staying, everyone. The government will roll out a major policy initiative aimed at helping the country benefit more from the surge in gold prices. Gold is currently trading at $5,088 an ounce. Details in the following report.
The policy document, which is currently being finalized, should help shape and guide the country's response to the recent development on the international market when it comes to the price of gold. The formal announcement could be made by the Finance Minister, Dr. Atuforson, or the Governor of the Bank of Ghana, Dr. Johnson Isiama. One of the areas that the policy would look at is whether the Bank of Ghana could increase its reserves, not necessarily by buying more dollars, but purchase more gold, so let's balance the reserve position with a mix of dollars and that of gold. So going forward, we will see a mix of dollars and gold through the domestic purchase program. The move has been influenced by the current developments on the international market that are seeing the price of gold hit more than $5,000 an ounce. Another document seen by Joy Business again shows that the price of gold on the international market could be going up further in the coming months for this year. Therefore, government wants to make sure that there is a policy document that would guide any action that they would take going forward so that they are not overtaken by events.
Meanwhile, the Bank of Ghana signaled a deeper policy review of the domestic gold purchase program as it takes steps to improve its reserves for the year. Listen to Governor Dr. Johnson Isiama.
A second consideration is about foreign exchange stability and expectations. The cedi has been remarkably stable in 2025, reflecting improved confidence and a strong external position. While recent pressures appear largely seasonal, expectations will now play a central role in sustaining stability. The third consideration has to do with the role of the domestic gold purchase program in supporting stability and how critical this is going forward. While the program has played an important and deliberate role in strengthening external buffers, members will need to consider how its timing, its sustainability, and the balance sheet implications. All these should inform the calibration of policy and the ongoing policies to build reserves. Then the fourth and final consideration is about our external scrutiny and data integrity. Members, the upcoming IMF review in April 2026 will be based on end December 2025 data.
That was Governor of the Central Bank, Dr. Johnson Esiama. Up next, the exchange. And as we talk about rising gold prices and the domestic gold purchase program, I'm joined on Zoom by Dr. Benjamin Amma, who is Senior Finance Lecturer at the University of Ghana Business School. Good afternoon to you. So how might a potential shift in the domestic gold purchase program towards either more dollar accumulation or more gold purchases affect Ghana's foreign reserves and overall macroeconomic stability?
It depends on the asset pool that we have in our reserves. Is the hard currencies, the dollar, the euro, the pound, and then the gold also is part of the reserves that we have. Now, what we need to understand is that as we shift away from gold, then we have to go into the hard currency. As we speak now, because of geopolitical tensions and then the low demand for US dollar-backed assets, the value of the dollar globally has been quite low across. So if we decide to move away from gold, then our sure bet is to hedge our international currency or reserve in the US dollar. And if you look at what is happening now, you are better off hedging or positioning yourself in gold to diversify your international currency reserve pool than to rethink and consider going back to the US dollar. So for now, it is best if we focus on gold so that we can take advantage of the increase in prices of gold to soar up our international reserve. So between the two, currently you are better off considering the gold more than the dollar.
Yeah, the central bank governor mentioned balance sheet implications of the program. Can you explain what risks the Bank of Ghana could face if gold purchases are scaled up too aggressively?
For now, as you scale the gold purchases up, because gold prices are increasing, definitely your reserve value is increasing, your balance sheet is also increasing in value because gold price is increasing. But we also need to think about the storage cost, the insurance, and the other transaction cost that goes with holding gold as an asset. That will also be increasing because the more gold you hold, the more you have to pay for insurance, you have to pay for storage, and of course, you are also losing out on interest that you could have earned if you have invested in US dollar denominated assets. So as you shift your focus towards gold, there's an opportunity cost, but you need to weigh the two and then ask yourself, between the earnings that you could have earned if you have held US dollar denominated assets, because they are US dollar denominated, compared to holding gold that is also experiencing increases in prices, which of the two benefit you the most? And once you're able to look at that, you know which of them to use as your reserve item on your balance sheet, because each of them will still be an item on your balance sheet. But which one gives you more in terms of value? That is what you have to go for. So if the gold will give us more, then we need to swap our gold reserve, which will also, in this case, influence the value of our balance sheets.
And what are the likely effects of recalibrating the gold purchase program on inflation trends, city stability, and foreign exchange liquidity in the short to medium term?
In the short term, especially, gold prices in the short term, we are really fortunate that these days, if you look at last year up to this time, gold prices from short term to short term has been increasing. There are periods where if you hold gold in the short term, you don't really get the value that you need. But we are fortunate that for almost 1 year or so, gold prices has been on the high. So we are not seeing the short-term effect of gold price declines. In many instances, if you hedge in gold, you are looking at it over the long term. But for us, we are fortunate that even from short term to short term, gold prices are increasing. So we have been benefiting from what is happening on the market. So currently, if you are looking at gold prices and how it is influencing our dollar, our CD rate, is simply because our gold reserve value is increasing, and that is also increasing the level of confidence that the market has in our market, because we are shoring up our gold reserve, and that is indirectly feeding into the currency market and helping us to have some stability as far as our currency is concerned.
So given that prices are currently high and could rise further, how should the Bank of Ghana time its purchases to maximize benefits without creating policy or market risks?
It's about a steady and a gradual approach in the purchase of the gold. We need to have a target, and the target is we need to ask ourselves, countries around the world are buying gold, central banks around the world are buying gold. What target are they using? Data suggests that it is between 10% to about 2% or 1% of GDP, depending on the size of your GDP. So as a country, BOD will have to look at what target band are we working at in terms of our gold reserve accumulation, so that over time, we can gradually build up that reserve, a targeted approach, so that we don't go onto the market to buy as many as we can now to create some market distortion on the market. But we can do it gradually over time. Once we have a steady approach, then we are not going to affect the market that much. We will gradually give ourselves time and then build that reserve target that we seek to achieve. That will help in strengthening the city along that line too.
Well, my last question is off topic. The central bank governor yesterday opened the MPC meeting, signaling a cautious stance on policy rate cuts. I just want to ask what your expectation is at the end of the meeting.
One expects that there will be another policy rate cut, because we are going through a period of consolidation where all the declines in rate will have to be consolidated over time. So a one more step cut will help the market. By how much? Maybe 300 will help, 300 basis points will help, so that from that level, the central bank will look at how best they can maintain the rate for some time, and then look at how the economy will respond as we move on.
All right, thank you very much. Dr. Benjamin Amwa, Senior Finance Lecturer at the University of Ghana Business School, joining us for The Exchange. You're watching The Marketplace. We will be right back. And welcome back. The Securities and Exchange Commission has reaffirmed its commitment to protecting investor interests ahead of the issuance of corporate green and sustainability bonds in Ghana. Speaking with Joy Business on the sidelines of the Executive Capacity Workshop in Accra, Director General of the Commission, Dr. James Kluche Aveji, emphasized the bonds are not government securities, but designed to support and stimulate activity in the real sector of the economy.
The Exchange Commission has held an executive capacity building workshop in Accra to equip bank executives with practical insight into the issuance of corporate green and sustainability bonds. According to the Director General of the Commission, Dr. James Kluche, the bonds were designed to support the real sector of the economy once listed on the Ghana Stock Exchange, while ensuring strong investor protection mechanisms.
We have taken up on ourselves to have training for the markets. What you need to do, which project qualify, which project does not qualify, and in order to prepare them to come to the market to issue the bond. The SEC on our part are prepared to receive any application, any prospectus from the market that want to issue the green bond. We'll follow it up and then make sure that they conform to the guideline that we have issued in 2024. And once they're qualified, we'll give the approval to the prospectus and they can go to the market and issue the bond. It's basically for the real sector, the corporate body, not for government. So we can assure you that any corporate body that will want to issue the bond, we would do our work to ensure that the investors interest is protected, so that when that bond is issued, the bond will trade well on the Ghana Stock Exchange, the value of the bond will grow, the price will go up, so that tomorrow or in future, if you want to dispose of that bond, you make your capital gain. And so no fears for that. That is why SEC is there to protect the interests of the investor. This is not the bond that is going to be issued by the government. But in any case, if government want to issue it, we will still have to ensure that the right thing is done so that the investor's interest is protected.
The division director for the Gulf of Guinea and West Africa, Natalie Kosi Ekon, said the initiative is expected to accelerate capital market development and create employment opportunities across key sectors.
Making sure that we support the creation of jobs in the key sector, industry sector, where we see opportunity, like agriculture or tourism, working with our private sector clients. What it also means is that when you look at the status of our economy, the number of young people that need to have access job on an annual basis, the public sector cannot do it alone. And the private sector have a role to play. Across the different countries that we work, we're seeing the emergence of a new class of investors. But those investors need to have access to new product to be able to really participate in the economy. The opportunity of the green bonds is to offer to those investors not only attractive returns, but also participation in terms of impact.
The high-level workshop forms part of SEC's broader strategy to deepen Ghana's sustainable capital market by improving corporate understanding of the Green and Sustainability Bond Framework and its application to real sector financing and long-term investment decisions. The program was led by the International Finance Corporation, drawing on international best practices and relevant market experience.
Now, the Mahafo Community Cooperative Credit Union has recorded a strong financial performance for the 2024 fiscal year, posting a net surplus of more than 2 million cedis, including reserves. The announcement was made at the union's 11th annual general meeting at MIM in the Asunafo North municipality of the Ahafo region. Emmanuel Duchenfi has more.
Held on the theme, Credit Union, the builder for tomorrow's financial prosperity, the meeting called on residents to strengthen their savings culture as a means of securing future livelihoods. As at December 31, 2024, the MIM Ahafo Community Cooperative Credit Union recorded a total membership of 24,764, representing a 6% increase over the previous year, with a staff strength of 31. The credit union operates agencies in Goso, Kasapin, Ayumsu, Bediakun, Bitri, and Dominasi, expanding access to financial services within the municipality and its surrounding communities. During the period under review, the union also received national recognition, winning an award for compliance and prudential reporting in the median category at the 2024 Biennial Conference of the Department of Cooperatives. Chairman of the Board of Directors, Frank Chebafo, highlighted the successes recorded in the 2024 financial year.
I think we had the audit report, a very successful one, because there was a profit of about 2 million Ghana cedis for the year under review, that is the year 2024. And members were very, 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 very happy because at least they are going to enjoy 20% of the net surplus.
He appealed to the Bank of Ghana and the Minister of Finance to intensify efforts to crack down on loan repayment defaulters.
What I'm praying to the government or the Ministry of Finance is that they have to try and regulate some of our activities, like loan delinquency. And this is long overdue. Some time ago, we heard that Bank of Ghana is putting in place some measures so that if a member collects a loan from maybe Marco, he cannot move to other credit union for a loan once he's owing Marco. I would like to play with the Ministry of Finance or the central government that they should speed up with that.
Mr. Chebafo expressed optimism that effective collaboration among stakeholders will help address the challenge and safeguard the credit union's sustainability.
Our major activity is the loan. we give out loans. Per our policy, about 69% to 70% of our profit should go into loans. And if that is the case, we have to put mechanisms in place to retrieve all loans or most loans given out. So that is our plea. The Ministry of Finance should try to collaborate with Department of Cooperative and then Ghana Association of Credit Unions, so that loans given out will be able to be retrieved.
Emmanuel Edujemfi reports from MEM in the Hafo region for Joy News.
Now, the Design and Technology Institute, DTI, has launched a new alumni ambassador initiative aimed at positioning skills training and craftsmanship at the center of Ghana's future workforce. Speaking at the DTI Alumni Ambassador Workshop in Accra, leadership and influence expert Dr. Olu Ajayi challenged graduates to move beyond certificates and become active ambassadors for skills development, innovation, and national transformation.
DTI Alumni Ambassador Workshop and launch, participants were taken through a series of reflections and engagement focused on leadership, identity, and influence. Delivering the keynote and leading the plenary session, leadership facilitator Dr. Olu Ajayi urged alumni to see ambassadorship as a responsibility, not a title.
I believe that not everybody has to go through formal university education in order, to achieve their dreams and to be able to impact society. So there should be alternative paths, and TVET is an alternative path. And TVET is gaining more importance globally. So we do have a fantastic institution, DTI, here in Ghana with continental aspirations, and my passion is about helping to transform the mindset of the DTI alumni, to help them to see that this is not just about the technical skills they gain.
Alumni President Carl Edudankwa set the tone by placing DTI's mission with a broader global context. Speaking to Joy Business, he said a rising demand for technical and creative skills present a unique opportunity for Ghana.
Well, beyond this alumni engagements, we have a number of engagements in terms of bringing at the various region levels, program levels, and all those things. We have strategic programs in terms of program level, capacity building, leadership building. We also have various programs designed to sort of raise the next crop of alumni to be better than even we who are standing. And so you would see down the lane like alumni involved in policy dialogues.
The workshop ended with a call for alumni to serve as visible advocates for skills training, mentorship, and innovation as Ghana positions itself for a more skills-driven economy.
Up next on the Marketplace, our Money Lab episode for today.
Hi, welcome to Money Lab. My name is Paul Manti, MD of EDC Investment Limited. The last few weeks, we have been dealing with the subject matter, professional finance. But in order not to lose money, I want to encourage you that anytime you are investing, there are two important things you need to pay attention to. Number one, please deal with only regulated entity. If the entity is not regulated, then it's a no, don't even start. But number two, never forget that there is always a relationship between risk and returns. So where the returns is very high, the risk could also be potentially very high. Don't be driven by only the returns. You need to ask, what is the risk that comes with this investment? Because we want you to become financially independent, but we don't want you to lose money along the way. Many thanks for making time for Money Lab, and never forget financial independence is possible.
All right, and that's it for the Marketplace. More news on our website, myjoyonline.com/business. Up next, the latest international summaries.